Ethereum has been the disappointment of this cycle. In the last 4 years, the price did not increase whatsoever. Bitcoin, however, reaches new all-time highs all the time. The question is, will there be a catch-up? Will Ethereum in the end outperform? Let's have a look at some data most people are not considering. Let's see who's buying and selling. Now in white, we see the Bitcoin price. In green, we see the Ethereum price. And while Bitcoin from the top in October of 2021 was able to gain another 67%, Ethereum went down by almost 50%. Here's another way to look at the same thing. This is Ethereum relative to Bitcoin. How many Satoshis do we have to spend in order to buy 1 ETH? And it seems like this trades in somewhat of a range. Sometimes Ethereum is cheap, sometimes it's expensive. Now what's this arrow over here? That was a major shift in Ethereum's technology. Prior to that data point over here, Ethereum was proof of work. So everybody could set up a computer and mine Ethereum, get Ethereum tokens over time by just spending electricity. That has changed at that point here. And so there are two potential reasons why Ethereum underperformed since then. The first could simply be a sell the news event. So many people were hyped about the move from proof of work to proof of stake called the merge. That then once the news happened, it was a sell the news event. A second explanation is that at that point, no new entrants got into Ethereum. Before, you didn't even have to buy Ethereum. You just mined it and then you got involved into the ecosystem. Afterwards, you couldn't mine it anymore. And so this constant flow of new investors suddenly stopped flowing. That's potentially what contributed to that more than 70% underperformance as well. But have a look, we've got a bounce. Ethereum has recently bottomed at very similar levels to September of 2019. Does this mean that we could potentially see Ethereum finally outperform Bitcoin again? Potentially by almost 300%. Of course, things aren't always that easy, otherwise everybody would be rich. But we can have a look at other relative valuation charts that might be useful as well. Now, Ethereum has a lot of correlation with the altcoins. What that means is that when Ethereum is going up, the altcoins tend to go up as well. When Ethereum goes down, the altcoins tend to go down as well. This connection of the price movements is stronger for Ethereum and the altcoins than for Bitcoin and the altcoins. And because of that connection, because capital flows from ETH to the alts and from alts to the ETH, the ratio of the market cap of Ethereum and the smaller altcoins potentially shows us a trading range as well. According to this chart, the potential downside of Ethereum relative to the altcoins is maybe 30%. The potential upside is close to 70%. So the risk to reward looks quite healthy. We can also generalize this. That's the Ethereum dominance. How much of all of crypto is currently in ETH? This trades between 7% and 21%. Currently we are at 9%. So again, potential risk to reward doesn't look too bad if Ethereum can garner some momentum again. But that's then the major question. What should trigger that momentum? Who should buy at this point in time? It's probably not the retail investor anymore, because we're already observing this with Bitcoin. Have a look at the number of addresses on the Bitcoin chain with at least one BTC. It tended to rise quite consistently up until 2023. In the last 2 years, we haven't seen the number of wallets with more than Bitcoin grow anymore. It rather tends to go down now. Here's the Bitcoin price as a reference. It seems like the number of wallets with at least one BTC tend to go up when the price is going down. So retail tends to buy more Bitcoin when Bitcoin is depressed. Yet, even though the number of holders didn't go up anymore, during that time frame, Bitcoin still did a 5x almost. Isn't that fascinating? When there's no accumulation by retail, how the price can still do a 5x. We all know why that is the case. It's because of Wall Street. So Michael Saylor is buying and the ETFs are buying. They accumulated in the last 1.5 years more than 1 million Bitcoin. And it seems like the accumulation is accelerating over time. This is not the US dollars that is held by those entities. This is the number of Bitcoin. So even though the Bitcoin price did more than a 10x, the rate of accumulation still grew. So the US dollars that go into the system is growing faster than the Bitcoin price. And so when this is currently the dynamic for Bitcoin, can we have potentially the hope that Ethereum will experience the exact same thing? The answer is probably yes. What we've got over here is the Bitcoin ETFs. And over the last month, we have seen 2% supply absorption if we annualize that supply. So the ETF tends to buy. Most days we see purchases through the Bitcoin ETF instruments. Now have a look at the same data for Ethereum. We see very similar supply absorption, 1.9%. And there's pretty much no single day where we see outflows recently. The last day of outflows was on the 16th of May, so 1.5 months ago, and that was very modest. Since then, every single day, Wall Street is buying Ethereum. Ethereum is 55% of all of capital in decentralized finance. Here's the total value locked over time. We had our DeFi summer, then subsequently a massive bust because of Terra Luna and the FTX collapse. And since October of 2023, we are going up again. Now, what happened in October 2023? The answer is money started to flow into the system again. What we've got over here is the stablecoin market cap. So whenever you send your hard-earned fiat to a centralized exchange, that centralized exchange sends this over to a stablecoin custodian. The custodian holds the funds, potentially generates some interest on top of that, and it also issues the stablecoins back that you can then trade with on the chain. And the issuance and the redemption of stablecoins can be observed in this chart. And after the FTX collapse, we saw many people just withdrawing their funds from crypto. But since October of 2023, the market is expanding again, very constantly. I like this chart a lot because it shows us in a very clean manner whether or not we're currently in a bear market or in a bull market. We don't have all of that volatility that we've got in total value locked charts like this. Are we going up or down from here? According to this chart, nobody knows. There's so much wiggling. But October of 2023 was the absolute bottom of total value locked for Ethereum. And that was also the absolute bottom for the stablecoin market cap. I do not think that that's a coincidence. Measured in Ethereum, the total value locked on the chain is close to all-time highs. Again, the bottom was in October 2023. Here's the decentralized exchange trading volume over time. Again, measured in Ethereum, relatively constant. It's not growing, it's not slowing down. And here we've got the number of active addresses over time. This tends to even grow slightly over the years. And we've already looked at the stablecoin market cap. It's now at higher levels compared to the peak of DeFi summer. And since the total value locked on Ethereum is not at new all-time highs, my interpretation of this is that the ecosystem as a whole now has less leverage compared to March of 2022. So there's less risk of a DeFi protocol suddenly imploding. Really, in this current situation, I think it's better to work with the general market structure instead of trying to find the needle in the haystack. Yes, there are a few altcoins that made profit in the last year. This is the smaller altcoins, the performance in the last year. There are a few green bubbles over here, but chances are, especially when you've got a diversified portfolio, that you are down. Because crypto is highly correlated, so assets do tend to move in the same direction at the same time. But there is long-term underperformance of the altcoins. What we've got over here in green is Ethereum, and in white we've got the altcoin. Both lines go up and down at the same time, but the white line tends to do worse long term. And there's a good reason for this massive underperformance of most tokens. And that's over here. It's shown on Tokenomics.ai. That's a website that tracks various altcoins. And just have a look at this. WorldCoin and Trump sees a lot of unlocks tomorrow. 5 million worth of unlocks. Solana has 10 million, but Solana is overall much larger in market cap anyways, so it doesn't matter too much. But WorldCoin and Trump doesn't have as much usage. And so, surprise, surprise, WorldCoin relative to Ethereum long-term tends to go down. And Trump relative to Solana doesn't look that different. When the early investors and the insiders and the team is getting more and more tokens over time, and the project itself isn't growing that much anymore, we see constant underperformance. But it's really about the relative valuation, right? It's relative to Ethereum or relative to Solana. It's not just in US dollars, because sometimes when there's a rally, the altcoins go up as well. It's just the ratio of the small altcoin relative to the larger market-leading cryptocurrency that goes down over time. And so there's a way to make money with this. We bet on falling prices of all of those crap coins, while at the same time we bet on rising prices of Bitcoin, Ethereum, and Solana. So we're winning on on one end we're losing, on another end we're just playing the delta, and we can make money by basically turning this chart around. Everything that's red here can turn into green, everything that's green can turn into red. And then all of a sudden we've got the odds in our favor. We are not trying anymore to pick the needle in the haystack. We're just betting on the haystack continuing to do what it's always doing. And so have a look at how our community is making money with this. If you've got proper stop losses in place, if your risk management is on point, individual trades can make massive returns. And so that's why I tell everybody that considers following this strategy to first watch the very first tutorial video here. Risk management with relative valuation bets. It's 28 minutes. Once you've watched that, potentially also with this video over here, you should be good to go. There are tutorial videos on all kinds of topics, but again, even though it's not a sexy topic, risk management does matter. Because even though the odds are in our favor with this strategy, you don't want to lose your shirt just because you've got one losing trade. Just because 1 out of 10 trades fails doesn't mean that you can use unlimited leverage without stop loss, because then this single trade that goes wrong will crush the entire portfolio. Risk management is super, super important. So feel free to learn more. It's currently $125 per month. You will lock in that rate. So when I increase the price in the future, you will not be affected by that. Only new signups will be affected by higher prices. A link to premium will pop up over here. Just click on that. It will lead you directly to the website. If it's your very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube, or see you in premium. Cheers.